We've seen a softening of economic data recently in one of the world's largest economies. We're talking here about China. The PMI numbers for both manufacturing and non-manufacturing have disappeared below the critical 50 level. This means that there is now, technically speaking, a contraction within both these areas of the economy. At the same time, China is trying as much as it can to bring down the price of raw materials. Of course, China owns a lot of raw materials around the world, both in stockpiles and also under the ground. John Meyer joins us now from SP Angel. John, an interesting dilemma for China. It's got all this to deal with, plus the fact it's got to worry about the rising cost of oil and some of these input prices that are coming through. And of course, it's got a lot of small to medium-sized companies that are going to feel the effects of all this. What is China doing? Why is it doing it? And what are the end effects?
Yes, Stuart, China is deepening its reforms, and it continues to have Communist Party meetings to discuss and then to implement the reforms that are coming out. Quite a lot of this is in response to reducing pollution and having started to reduce pollution by reducing the power available to aluminium smelters, for example. They're now having to correct that a little bit by helping small and medium-sized companies, which have been struggling with rising input prices. So one of the effects of reducing power to aluminium smelters is that aluminium prices have gone up quite a lot, and that that input price to the small and medium-sized enterprises that don't have big margins to play with is that their input prices have gone up, and it means it's harder for them to employ the people that the Chinese government wants them to employ, because that's a major pillar of their new strategy, is bringing yet more people out of the rural community, creating more employment, and dare I use the term leveling up in terms of the massive gap in China between rich and poor.
What about the work of the Strategic Reserves Board in China? Because, as I said at the top, that China owns a considerable amount of raw materials, both in the ground, undeveloped, and also in their stockpiles. What is it trying to do at the moment to try and bring the prices down? Because that's all part of the picture, isn't it? They don't want prices to run away, and it's a very difficult. As I said at the top, it's a big dilemma for the Chinese authorities.
So at this latest meeting of the Central Committee for Comprehensively Deepening Reforms, they've talked about strengthening regulation for anti-competitive practices that are effectively raising input prices for these SME companies. And so they're planning to expand, I think, the SRB, that's how I read it, to probably hold more metal rather than less, and then act as a kind of balancing mechanism where they limit the excessive rises of metals prices, particularly in China. This isn't so much about the rest of the world. This is local groups ramping up premiums for physical metal for local manufacturers. So they want companies to stop that. At the same time, this will also impact global commodity prices to some degree, but we've also seen it in the States, where actually getting your hands on physical metal has gone up in price a lot. So there's local premiums paid have ballooned beyond expectations. We of course see that then dragging up the price of copper and nickel and aluminium and other metals, which haven't gone to crazy levels yet, but we are seeing a new record price for nickel. I mean, it wasn't as high as it was 10, 15 years ago, but it's still quite a high price, driven by the electric battery revolution, driven by strong demand for stainless steel. So China is just looking to dampen the excessive moves in metals prices. I think they realize they're unlikely to be able to limit the overall growth in metals prices. Last time they tried this, it worked for a week or two, and then prices took off again. And it's very easy for China to empty the strategic reserve and have nothing left, and for prices to then carry on going up, because it's a big old world out there, and it's very hard for this sort of organization to have enough metal to really damage the market.
Well, we've seen this time and time again, haven't we? Not just for the metals markets, but in the currency markets as well, with ways in which authorities try and steer currencies. You really cannot beat the global market, which I guess gives some sort of reassurance to us all that market dynamics actually do underpin everything we do, which is interesting. But I wanted to ask you one other question about what China's doing and how it is going to affect us here in the West. You say it has had a little bit of an effect on global prices, but ultimately, presumably, as I said, markets win through. What does give? I mean, I can't imagine for a single moment that the Chinese authorities are going to let this beat them. At some point, they're going to have to give in, I guess. But how does it affect us here in the West? Do we now expect to see somewhat lower prices, do you think, come through? And to what effect will that have on some of the miners and so forth, those companies that like higher prices, because that's the only way that they can really afford to get some of this metal out of the ground?
Well, last time they did this, it was a couple of months ago. They made a lot of noise. There was a lot of political statement coming out of the Communist Party, and then not a lot of action. There were sales of copper and zinc and aluminium, but not enough to really change anything globally. What did happen though was a bunch of US funds, I think, jumped on the news and helped the metals prices go a bit lower. So there was more speculative activity moving prices at that point. But after a couple of weeks, markets sprang back up again, and now we are probably higher than where we were before. Now they're trying this again. Again, the sales that they announced yesterday, not big sales of commodities from the SRB. So I think we're going to see this game of cat and mouse where there's lots of rhetoric, a few sales that may be smaller than anyone expects, still keeping their powder dry just in case, because the reason for a strategic stockpile is to actually ensure that there is metal there when there's a real problem with logistical supply chains, maybe with pricing, but more because there's a physical lack of metal available. And warehouse stocks are relatively low for many of these commodities because the miners have been struggling through the coronavirus, through the COVID lockdowns and all of that sort of stuff to produce as much as the world needs. So you can't beat that at the end of the day.
I know you're not an economist, so I'm not going to ask you to read too much necessarily into what I said was a slightly weakening or softening economy in China. But I do want to get your idea as to what's behind this, whether or not the metals prices have anything to do with the fact now that we got this PMI data coming out below 50. In other words, technically speaking, we've got a contraction in manufacturing and non-manufacturing in China. It is only a small margin below 50, but I guess if it drives down any further on down, there are some real serious questions we have to ask about the future and what's happening in China. Is this just, do you think, a soft patch, which is driven by what you say are these high prices and the fact that we've not really been able to see Chinese manufacturers deal with these high prices, or is it a function of COVID? What do you see as behind this slowdown in China, and do you think it could well either get worse, exacerbate, or do you think it's just a small blip in what is otherwise an economy that's going to continue to rebound?
Well, China's maintaining its zero COVID policy, and it did have a few cases a few weeks ago. It now says that it's clear of COVID again, although that we may or may not believe that. What I do believe is that they are largely clear of COVID for the time being. Most of Asia has slowed down, and for similar reasons, in that the semiconductor chip shortage out of Taiwan is causing problems for automotive manufacturers all over the world. Manufacturers don't seem to be able to make cars without semiconductor chips these days, I'm afraid. And we've also got the logistical chains. So if you're producing low value goods, sometimes it's too expensive to ship them to the West. We've heard stories of Tonka toys, for example, there's not enough value in those Tonka toys to pay for the shipping containers to take them over to California. That kind of thing is causing problems. Other logistical supply chain interruption issues, disruption type issues, and of course, China is working very hard on reducing pollution. It has this clear skies policy now, or what was called the Green Shield policy. So that's where they've restricted hydropower availability to aluminium smelters and probably other more polluting manufacturing businesses. And that has all come together to serve to just dampen down economic activity in China. And we've also seen a certain amount of that in the rest of Asia. So yes, it's a little bit of a slowing, but It's not. There's not much of a slowing, and it's not likely to continue for very long.
Yeah. Okay, John, look, thanks indeed for joining us, updating what's happening in China as it tries to steady those input prices. John, thanks for joining us. John Meyer from SP Angel. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.